Hey guys, welcome back to the channel. Today's video, we're going to be talking about the 5 investment mistakes to avoid in 2025. And if you want tips to prevent those from happening to you, then stick around. One of the biggest mistakes that I see new investors make is they start investing without a clear plan. And it doesn't matter if they're investing in the stock market or if they're investing in crypto or real estate, having a plan, having a roadmap is going to be essential if you're trying to achieve these goals. It doesn't matter if you're trying to reach a portfolio of $100,000 or $100,000 in crypto, or maybe $100,000 in real estate. Everything's going to start with having a plan put together. And this is the best way that I know on how to put a plan together. You're going to start with nothing more than a piece of paper and a pen. Okay. It doesn't have to be something fancy. You could be doing this while you're having your morning coffee, or maybe listening to music, or you can even be thinking about this on your way to work. All right. There's 100 different ways you can do this, but essentially you need to have this written out on a piece of paper or a Word document on your computer. Now, how do you draft this plan? Basically, you're going to start with what you want. Okay. It doesn't matter if it's 1 year, if it's 3 years, or if it's 5 years. You're going to start with exactly what do you want, the big vision. What is it that you're trying to achieve? And then little by little, you're going to work backwards. Okay. Let's start with the 1 year plan, because I think that is something a lot of us can start with. All right. Let's say that you want to have a $24,000 stock portfolio by the end of 2025. And that way, over the next 4 to 5 years, you will have a $100,000 stock portfolio. So starting with the 1 year, what we're going to do is work backwards. Okay. So we know there's 12 months in a year, and we're going to break these months out. We're going to say that we need to at least put in $2,000 a month into our investments. Okay. And that means every time we get paid, every 2 weeks, we're going to be putting 1,000. If you can't do 1,000, if you can't do $24,000 a year, then do 12,000. If you can't do 12,000, do 6,000. The point is you need to start somewhere. All right. And you're going to work backwards. You're going to work backwards down to the weeks. All right. You're going to go from year, month, and then weeks. And then you're going to hit all of these milestones. Okay. And remember, you want to write all this stuff down so you can keep track of it. You want to do kind of like a quarterly check-in with yourself. That means every 3 months, you just want to check in with yourself and monitor your progress. This is the most effective way to start investing, is to have a solid plan put in place. The second biggest mistake that I see is investors chasing hot trends. All right. And this could be in stocks, this could be in crypto, and this can even be in real estate. Now, especially in the stocks and crypto space, because they're so easily accessible by everybody, most new investors make this mistake of falling into the trap of just following the crowd, of chasing the trend, of chasing these momentum coins or these momentum stocks in hopes that their money is going to 100x or 500x, and they're all going to be millionaires by the end of the week. Now, I'm here to say that the odds are highly stacked against you. Okay. And it doesn't matter if it's a stock or a crypto coin or even a strategy. I've seen a lot of investors hop from strategy to strategy, just giving it like 2 or 3 days of trial and error, and then they end up losing a ton of money. This is especially true in the trading space. Whether you're a swing trader, a day trader, or a futures trader, there's too many traders out there who don't give it enough time. Now, me personally, I'm not a trader. I'm a long-term buy and hold passive type of investor. Now, in order to kind of prevent this from happening, one thing I like to do is spend a lot of time researching what you want to buy, what you want to invest in. All right. Spend more time researching and analyzing quality companies that you can have for the long term, right? This is why I'm a buy and hold investor. And if you want to trade, if you want to take on some higher risk positions, then you absolutely can with a smaller amount of money, right? You can invest in crypto coins. You can invest in momentum stocks. You can invest in, maybe try your hand at trading or something. But the point is a majority of your portfolio is going to be held up in something very stable, something like an S&P 500. Maybe it's a bunch of ETFs that hold baskets of stocks. You want to have that stability, and then little by little, then you can start playing around with some money. But the point is you're building wealth at this stage, right? You're not just dumping money and chasing trends and then ultimately losing money, because then you would be hustling backwards at that point. Now, the third biggest mistake I see is that investors are way too concentrated, whether it's in the stock market or crypto. Let's take the stock market, for example. In the stock market, they might be concentrated in just three different companies. Now, if one of these companies goes bad or they have a bad year or something bad happens to them, then they could see their portfolio drop by 33%, right? That's insane. That means 33% of their entire net worth is tied up in one company. Now, that is very risky, in my opinion. The same thing could be said for crypto. Let's call it Bitcoin. All right, let's say one investor puts all their wealth into Bitcoin. Now, this investor could have had a great year. They had a great year. Bitcoin's been doing well for over the last year. However, Bitcoin and crypto in general is very volatile. There may be a time where this investor could see or possibly see their net worth get halved, meaning that they're going to lose 50% in value and maybe even as high as 60 or 70% in value. So it's always a good practice to diversify. When I talk about diversification, or when any investor is talking about diversification, basically you want to think of it as like a pie chart. Now, each slice in the pie chart represents the stock market, represents crypto, represents real estate. Maybe you have some gold, maybe you have some cash, maybe you have some bonds, right? Now, the best thing is if one of these asset classes does terribly, then the other ones are still keeping you afloat, right? They're not bringing you down. And this beats being so concentrated in just a few holdings. Now, for the stock market, in order to diversify and kind of stabilize your portfolio, you can think of something like an S&P 500 index. You know, an S&P 500 index has 500 of the largest US-based companies in that ETF. So when you invest your money into it, you're really spreading your money across 500 different companies. Now you can couple that with a little bit of crypto. Maybe you have, $100,000 in, the stock market, in an ETF like an S&P 500, and then maybe you might have $25,000 to $30,000 in crypto. Maybe you can have another $25,000 to $30,000 in real estate, and then the rest, could be in cash or bonds or cash equivalents, right? But this is diversification. You can even add a high yield savings account to this, and that would add to the portfolio. So this is something you can think of. This is something that you should implement in your portfolio if you're investing for the long term. The fourth mistake to avoid in 2025 is letting your emotions take the wheel of your investing journey. Now, there will be volatile times, all right? The stock market, cryptocurrency, even the real estate market, it will go up and it will go down. But the best thing you can do is remain steadfast, refer back to your investment plan, and understand and educate yourself that things that go up, they also go down. That is just the life cycle of all these asset classes. One year, real estate might be in favor more so than crypto and the stock market. The next year, real estate might be out of favor, and stocks and crypto are now in, and now they're pumping up, right? So, alternatively, crypto could be beating both asset classes, and the other asset classes aren't doing so well, stocks and real estate. So the thing is, you can't be emotional when these things happen. You have to educate yourself. You have to have this long-term picture about your investing, and you have to always refer to your investing plan. So by having this long-term picture and knowing that there will be volatility, right? One phrase I like to use is that, there will be short-term pain for the long-term gain. Okay. Volatility is the price you're going to have to pay for long-term returns. In the stock market, stocks go up and down. People are buying, people are selling, but it rewards the investor that holds for the long term. Okay. Not every company can adopt this idea, because some companies might go down the drains, but if you're investing, like I said, into something like an S&P 500 that has historically performed very well over long periods of time, returning investors between 8 and 10%, then that would be more worthwhile than investing in very high risk single individual stocks. Now, for crypto, you can actually stabilize your portfolio by investing in more stable coins, or probably just allocating a larger portion to something like a Bitcoin. And then you can have your other coins, your altcoins, your meme coins, all that other stuff off to the side. Okay. But when these large dips happen, okay, you have to look at them as an opportunity. I like the saying that when there's chaos in the markets, there's opportunity. There's also another saying out there that when there's blood in the streets, buy, even if it's your own, right? So this is the kind of mindset we have to have when there's opportunity, when there's red days, when there's down days, when there's market corrections, when there's recessions. These are opportunities to buy our favorite companies, our favorite stocks, our favorite ETFs, our favorite crypto coins at huge, massive discounts. So if you have and adopt that mindset, then you can actually put a lot of this emotion off into the backseat and not worry about it, because you're an educated, prudent, stoic investor, has a plan. And if you stick to this plan of consistently dollar cost averaging, you will come out on top. And finally, the last mistake to avoid in 2025 when you're investing is failing to review and adjust your portfolio. Now, one thing I like to do is review my entire portfolio every 6 months. That's right. Every 6 months, I sit down and look at everything I own and see if anything needs to be adjusted, whether that's in, the stock market, whether that's crypto, or whether that's real estate. Basically, I want to adjust and look over my entire portfolio, do a periodic portfolio review, and see if anything needs to get kicked out, right? Especially in the stocks, especially in the crypto. Is there any stocks that need to shave because they're either underperforming or they're just not doing well enough, or maybe my thesis for them have changed? Now, just because they're underperforming, it doesn't mean they're bad. We have to remember that as well. All right. Just because they're underperforming, it actually might be an opportunity. And remember, investors are emotional. People sell on news. So maybe it's just some bad news. If you weather the storm, continue to dollar cost average, things will come out on top. But coming back to the, reviewing and adjusting of your portfolio, depending on where we are in a market cycle, that might also have a piece to play in the review and adjust phase of this, right? You want to make sure that you're at least keeping abreast of all the current news, all the latest trends, and adjusting your portfolio to what makes sense for you, what makes sense for your goals. Again, you want to refer back to that investment plan. And so with that, that is the end of this video. I hope it was very educational for you. I hope you got a lot of tremendous value from it. Please don't forget to like and subscribe. And if you have any comments, I read every single comment, and I would appreciate it if you left a comment. Invest in the very bottom, so I know that you made it this far and that you'll be taking 2025 very seriously and avoiding these mistakes with the tips that I gave you. Without anything else, guys, I will see you in the next video.